Welcome to tonight's webinar. My name is Brian and I will be your presenter this evening. I already typed in a quick message to you. Please use the questions function if you have any questions during this presentation. I will stop and pause and head back to the main menu and look and see if anybody has typed in any questions. We do have a very large audience tonight, so I do look forward to trying to answer some of your questions this evening. And it's just to begin with, it's great to have a large audience. Usually I have pretty large audiences when I'm talking about moving averages or MACDs or chart patterns, some kind of technical tool or technical indicator. And let's face it, those aren't the holy grails. They all work very well if we know how to use them, but those are not the holy grails. This presentation is on you as an individual, and you are the holy grail. And so I'm glad to see that there are a lot of people attending tonight. I think you'll enjoy tonight's presentation. I think you'll get a lot out of it. So that's my information there. If you have any questions, and we'll go through and I'll provide you at the end of the webinar, I'll provide you with a lot more resources. So please stay with me all the way through tonight's lesson. Let's get the regular stuff out of the way, meaning the disclaimer. I'll just pause for a moment while you glance at that. And this entire presentation tonight is basically talking about this disclaimer. It's trying to get that past the fact that the markets can be risky, which we know they are and anything can happen, but that's the whole point, is fine-tuning the markets to us as an individual. So here's the outline for this evening. There are no holy grails except for you. You are the holy grail, and if you can figure out your trading personality, then you're going to be have a lot more of a chance to be successful in the markets. After we cover that in depth, then we'll go through and just briefly talk about the recent fundamental analysis, the big macro drivers out there affecting the markets, and then we'll also talk about technical analysis and look at a few charts and some intermarket relationships, live market examples. So I always, whenever I'm introducing a concept, whether it is a chart pattern or technical tool, or even using the Interbank FX MetaTrader software, I always talk about trading psychology somewhere in there. So this will be heavy on the trading psychology, and then on the back end we'll jump into what's going on in the markets. And then again, I'll provide a review for you and again give you some extra added benefits through some resources. So who is the Holy Grail? Well, you, of course, are that Holy Grail. So we're going to be able to combine this slide into a pretty lengthy talk here. I also like to call a trader the system. A lot of people are picking up books, or they're looking on the TV, or they're looking on the internet for a system. Well, those are all great, and there are some really good products out there and software and different materials and books and things like that, and chat rooms and whatever they may be. But you've got to find out who you are first, and then you can take advantage of those additional pieces that you may be looking into, that you may be purchasing as kind of add-ons. So let's talk a little bit about you. There's some specific questions that you should ask yourself before jumping into any market, not just Forex, but any market. And you guys can write these down, but some of these questions are, one, most importantly, is how much time do I have to focus on the markets? All right. That's really important, because a lot of you may turn on TV and listen to CNBC. A lot of you may have heard about a product online and you can go and purchase that. But you have to ask yourself, how many times have they asked who you are as an individual and what you're looking to get out of the markets? Are you looking to aggressively grow your account? Are you looking to generate income from your portfolio? Are you looking to protect your portfolio, such as equity investments in mutual funds and 401ks and IRAs and pension plans and things like that? So the markets can do all of these different things. They can grow our account aggressively. They can generate income, and they can also protect our accounts. But again, if we don't know who we are, then they can be very risky, obviously. First of all, the markets can be risky, but second of all, we may not be using a software or using a trading strategy correctly for who we are as an individual. So keep in mind when I say who are you as a trader as far as what you can afford to pay attention to the markets, I'm talking about your time frame for a trade. There's 4 typical time frames out there, and again, you can write this down. One is an intraday trader, very short term. One is a swing trader. One is a intermediate trader. And finally, you have more of a position long-term trader or investor. And sometimes people ask me, which one's best? Which one is going to make the most money? And that's not what it's about, because sometimes I talk to someone and I'm working with them and they have a full-time job. Well, that person with a full-time job is not going to be a very good day trader, because they're going to come home from their full-time job and they're going to turn on the computer and try and make a trade in about a half hour, an hour, and try and fit something in. A day trader sits around for 5 or 6 hours in front of the markets, not 24 hours, not 20 hours, but 5 to 6 hours in front of the markets, and they hopefully get a trade out of that. The markets sometimes don't let us get a trade out of that if they're not volatile. Today, we had a little bit of volatility with the markets starting up today, the equity markets, and then moving down, and our Forex pairs moving. That's what we like to see. But sometimes the markets just open up in one direction and just go very, very, very sideways. So the markets dictate how often we trade, no matter what type of trader we are. Even if I sit in front of the market 6 hours a day, that doesn't necessarily mean I'm trading. Or on the other hand, if it's very volatile, it might mean that I'm trading 2, 3, 4, 5, 6, 7, 8 times in a day. It all depends on what the markets are giving me. So the first thing to ask yourself is, what can you afford to provide the markets as far as time? The less time you have, the longer your trading time frame might be, the less contracts you might be putting on, the more you're risking for a longer period of time to make a little bit more over that longer period of time than a very short-term trader who's sitting in front of the markets. So in the end, it may work out. I might make 3 trades today, or 6 or 7 or 8 or 9 trades this week as a day trader, and a swinger intermediate trader might make 2 to 3 trades this week or this month, but because they're in it for a longer period of time, they're risking a little bit more to make a little bit more over a longer period of time, it kind of ends up being the same percentage-wise and dollar-wise for the most part. Yes, there's some discrepancies here, but the bottom line is, like I said, if you have a full-time job and you try and become a day trader, well, your boss is not going to be very happy when he comes over and he's looking over your shoulder and you're day trading in the markets instead of doing your job. We know how many people are unemployed out there, and I'm sure someone will very happily come in and do your job very well for maybe even less money than you're getting paid if you're goofing off. So keep that in mind. Not everyone can just become a day trader. It all depends on how much time you have available in the markets. So again, you can write this down. When I'm working with people, a day trader has to be in front of the markets 5 or 6 hours a day. A swing trader has to be in front of the markets 3 or 4 hours a day. An intermediate trader, maybe 1 hour throughout the day, doesn't even have to be during market hours. And then a position trader or a longer-term trader / investor, they might be not in the market. They might not be checking more than scanning the headlines, maybe a half hour, 45 minutes a day here or there. There are people who do invest, their money for a longer period of times, but they look to try and generate some income or try and make some profitable trades here or there. Again, the bottom line is we always have a trading plan. So tonight we're not really talking about a trading plan as much as you and starting to figure out who your trading personality is. But keep in mind, as a disclaimer said, when I'm talking about income strategies, when I'm talking about protection strategies, when I'm talking about aggressive growth strategies, obviously there's a downside risk to all of those, because if we're not trading properly, we can have a loser in any of those situations. So no matter what strategy I'm talking about, no matter what time frame I'm talking about, remember the risk to doing this. There can obviously be a losing position, and quite often we expect to have losers. We're not going to win 100% of the time. So just keep that in mind. When I'm talking about these strategies, nothing is guaranteed out there. All right, let me just check back and see. Like I said, we have a lot of people on here with questions, and there's already some coming through. So let me just pause really quickly. I tried day trading at work. Bad idea. Okay. There you go. Thank you, whoever that is, for backing me up on that. Yes, it probably is going to be a bad idea because you're not going to be able to focus on the markets like you need to. So this is the first step. Who am I as a trader? If you have a full-time job, please, it's probably not a great idea to be a day trader, especially at work. Maybe you can fit in some hours after, but if you have a family, if you have kids, if you want to get some sleep, it might be very difficult to go to work from 9 to 5, come home, stay up for 5 or 6 hours, and then get to work the next day and not be a little bit tired and maybe even falling asleep at your computer. So not a good idea. I open a position and he uses to last between 10 and 15. Is that what's considered swing? So that's a good question. That's going to lead me to my next point. So I talked about 4 types of trading time frames or styles: day, swing, intermediate, and position. In foreign currencies, things are a little bit different. You have to remember you're dealing with leverage now, okay? And so if you're an intraday trader, you're probably going to have your positions closed out, and then you go to bed or you do whatever you got to do, and then you come back to work the next day and it's a new day. If you're a longer term trader, all right, you're doing one of 2 things. One is obviously you're looking for longer term patterns and you're risking enough pip wise to take out that volatility of announcements and things like that while you're sleeping, and you might risk 2 or 3 or 400 pips to make 500 pips, 800 pips, 1,000 pips. So you have an intraday trader and then you have a longer term trader. That longer term trader also may fit into the hedging category, and what I mean by hedging is if you've worked for a company for a long time and you have hundreds of thousands or millions of dollars built up in equity, and you learn some of these relationships that I talk about a lot in my blogs and in the Interbank FX Connect social site, which I'll show at the end, then you may be seeing some relationships between the United States dollar and equity markets, and saying when equity markets get overvalued and come down, I notice that the United States dollar gets stronger, and you may be taking on a position almost like a risk mitigation position where you say, I'm willing to risk a couple hundred pips in some currency that's crossed with the United States dollar, because if I lose, that means that currency went higher and it went against me, and that means hopefully if the relationship stays in play, the stock market went in higher. So you're playing a basically defensive hedge to hedge your equity investments and sleep better at night when you see some kind of relationship in place that you see. If the equity markets are going down and you're worried about that, then you put on a trade to buffer that by using the foreign currency markets, option markets, or whatever it is. So the longer term trader is what I'm saying is has to have a larger account, because you have to be willing to risk 200, 300, 400 pips. Not many people with a $2,000, $3,000 account can handle a 2 or 3 or 400 pip loss. So in foreign currencies and leveraged products, you're kind of either an intraday trader short term if you have a smaller account, or if you're trying to grow your account because you're trading and the markets are good and there's good opportunity out there, or you're kind of the longer term trader where you're trading and risking enough pips to sleep through the night and not have an economic number in Australia bump you out. So what I'm saying is you can't risk really 20 or 30 or 40 or 50 pips and go to sleep and hope everything's going to turn out okay, because 20 or 30 or 40 or 50 pips is a very small amount in these markets. All right, so you have to let the markets tell you. Right now, ranges in the foreign currency markets are a little bit smaller than what they were last summer when we were very volatile, and I'll show that to you in just a moment when we go into the charts. So again, the markets dictate what we can do. Remember, and this is the most important thing, the markets tell us what to do, how to trade, when to trade, how often to trade, how large of size to trade, all right? And you guys have to have that feeling. And that's hard for someone who's new or someone who's put in money and just started trading and lost it to kind of get that confidence back to let the markets tell them. You got to arrive at a certain point in your experience and knowledge base, and that doesn't happen by just blindly trading without a trading plan and this knowledge. So I keep talking about that word, those 2 words, trading plan. We're not going into that tonight, but that obviously comes into the trading psychology. That comes into knowing who you are as a trader. So number 1, figure out how much time you can put into the trading markets, into the foreign currency markets, or whatever you're trading, all right? And that starts to define how long you expect to be in a trade, how many pips you're going to risk, things like that. And you look at the average trading ranges and you start to get that feeling. Number 2, account size. I think we already touched on this, but the smaller the account size, the more the person's going to have to be sort of an intraday trader versus someone who's going to trade for hours and hours at a time, because you're not going to be able to sit in front of the markets for hours and hours and hours and hours and hours and monitor that. You're going to have to go to sleep at some point. You're going to have to go to work, whatever it may be. So that person has to have a large enough account to be able to risk keeping that position on day after hour, day after day, week after week, for all we know, if the trend is going their way and they're not bumped out and they're managing with stops and things like that. So 1, how much time? 2, account size. All right. Another thing to think about is like I said, the markets. The markets kind of dictate what we do. Right now, as I said, the markets aren't as volatile as they have been, so it might change how often you're trading and how large you're trading. So it starts to break down you as an individual. So that's what I mean by who is the Holy Grail. you're the Holy Grail, but you've got to be able to tweak any information you're getting out there, any information that you're purchasing, additional software systems and things like that. You've got to know who you are to make sure that you can massage it and kind of make it work for you. A lot of people who are option traders, and I don't know how many equity and option traders we have on tonight, but that's one thing that I do is I trade various time frames, various styles, various strategies across various markets, and I understand these relationships, and that's what helps me to work with people, because every single person I work with is different, and I have to adapt what I'm going to teach to them. So a lot of people like to watch a show called Fast Money on CNBC, which can be very helpful and very knowledgeable, but again, these guys are talking about all these different option strategies, and there's 30 or 40 different option strategies, and most people out there can't even have the account size. Remember, your broker kind of is watching you, and they have to have a trusting relationship with you before they let you do certain things. And some of the strategies they may be talking about could be pretty risky strategies, and you don't even have the account size or the trading level to do it. So until you know what you can handle as a trader, it's very hard to turn on the TV and say, ooh, that stock is for me, they're talking about it, or ooh, that strategy is for me, or ooh, I'm going to put on that foreign currency straddle or strangle or trade or whatever it may be. I may have no use in doing it for my individual situation, my individual account size. Let me just check back and see if there's any questions here. Let's see. Which type of trading style, in your opinion, give faster returns, day trading or swing trading? So again, that I just started in with this. Some people come to me and say, which is going to make me most money? Which is going to get faster returns? I don't know you, whoever asked that question. I know nothing about you. There's no way I could go ahead and say day trading is going to be better for you. Because again, you may not have enough time in front of the markets to be a day trader. You may not even have enough time to be a swing trader, and you may just not know that yet. All right. So the first question you have to ask yourself is, do I have enough time to be in front of the markets? 6 hours for a day trader, 5 to 6 hours for a day trader, 3 to 4 hours for a swing trader, and then you'll let the markets kind of dictate. Right now, day trading and swing trading kind of, as I said, I kind of bounce swing and intermediate trader out of the equation for foreign currency, because swing trading to me is trading for hours or a couple days, and if you don't have a large enough account size to do that, then you can't really swing trade. So I kind of make, in foreign currency, I kind of make it, I'm an intraday trader or I'm a longer term trader. And my intraday trader might bounce back and forth between really short-term intraday trading or maybe a little bit longer of a scalp, depending on the volatility that day and the ranges that day. That's kind of helping me. But for the most part, an intraday or probably swing trader, they're probably not holding on to things and going to bed, because with that position on, unless they're moving up their stops or turning on trailing stops, because these markets are too leveraged, they move too much, and they're too volatile, day to day to day. Europe could come out tomorrow, Asia could come out tomorrow, Federal Reserve and Ben Bernanke could come out tomorrow, and do you really feel comfortable risking 30, 40, or 50 pips going to sleep, knowing that the whole world is going to be trading and you're going to be in bed, and the markets could move very, very quickly? 50 pips is nothing. So generally, intraday traders are looking for 10 to 15 to 20 pips. But again, you have to massage that. If the range that day is only 50 pips, 50, only 50 pips, is it fair to ask yourself for a 10 to 20 pip gain? If it's 150 pips, then there might be an opportunity to make 10 or 20 or 30 pips. But that's what I'm telling you, is the markets help to dictate how often we trade, when we trade. And right now, you guys can answer this yourself, and we're going to go there in just a moment. Is the VIX high or low? You guys can, most of you should know that, but is the VIX high or low? And I'm going to show you that, so you'll have that answer in just a moment. So are you guys starting to understand that until you can figure out who you are as the system, then and only then you can start to adapt other features and other software and other TV stations and other market reporting sites and things like that to your advantage. The Holy Grail is right inside you, okay? It's inside your brain, all right? When I teach classes, when I do live presentations, the first slide I put up is ski bum, meaning I was a ski bum. I wanted to hang out in a ski town, and I met a trader, and I went to Chicago and I learned to trade, and I was there for 9 years before going out on my own and then starting this consulting company down the road, and been consulting for 4 years or 3 years, but I've been trading for about 13 years. And so the point is, if me as a ski bum could learn this, okay, all of you can learn this, but it does take time. It does take a gut check. It does take realistic expectations of what the markets provide. And right now, the markets just aren't as volatile due to ancillary things such as central bank coordinated efforts and things like that as we want them to be. Trust me, the markets can be a lot more volatile. Right now, they just aren't. Again, today was a good day. Yesterday wasn't as volatile as today. It all depends. It's day to day to day. Every day is a new day, but you've got to stay solvent enough to learn that and get that experience. Let's see. I'm just checking back with questions. There are websites to look at, and they say there are buy stops at this price and there are sell stops at this price. How do the people use these positions? Again, there are very good software systems out there, all right? I'm not saying that they're not worth it. They are, but you've got to answer some questions for yourself first, okay? Then you can use the software and you can say, okay, I have some market knowledge. I know who I am. I'm going to take this trade, or I'm not going to take this trade. Or I'm going to take this trade, but I'm going to manage it a little bit differently because it's going against the trend or with the trend. You have to have some market knowledge out there. You have to understand trends and support and resistance. And again, I'm going to show you some added benefits as far as where you can find some of that education. Let's see, I'm a homemaker. I have a 2 and, let's see, I'm guessing you have kids. Which type of trading is suitable for me? So again, here's the question. I am a homemaker, okay? I have kids. Which type of trading is best for me? Again, I don't know how many hours you have free without the kids that you can actually focus on the markets. If you can have 3 or 4 or 5 hours without any interruptions, you might be able to be a day or slash swing trader. If you don't have that time, you might be more of an intermediate type position trader if your account is large enough to handle that longer term volatility of staying in a position tonight into tomorrow into the next day. And keep in mind, who trades more often? An intraday trader, okay, who might try and trade a couple times a day or something like that, and only risking 10 or 15 or 20 pips to make 20 or 30 pips, or a longer-term trader who's risking 100 or 200 pips to make 300 or 400 or 500 pips. Who's the one who's trading more? It's the intraday trader. They're trading smaller size for more opportunities, okay, over and over and over. But they might have 5 or 6 trades, and the longer-term trader might have 1 or 2 trades, and they both ended up losing the same amount of pips, or they ended up making the same amount of pips, all right? It kind of equals out in the end. But again, I don't know your account size, and if you can handle a 2 or 300 or 400 pip loss of staying in the trade. And keep in mind, how often is that person trading who's a longer-term trader? Do they get in a trade every single day to risk 100 or 200 pips to make 400? No, they might only trade once or twice a month, okay? So that's the other thing you have to think about. The longer time frame that you're going to be in a trade, the longer it takes for these trades to set up. You have to have some patience. You have to wait for them to come around. So very, very good questions. Again, I can't answer these questions totally because I don't know who you are, but I'll give you some resources at the end, like I said. This has nothing to do with psychology. Well, you as a trader are, that's what we're talking about is basically you're making the decisions as a trader. And so thank you for your opinion. That's great. I appreciate the feedback. But I would have to say or argue that this is all about trading psychology, because if you enter the markets without knowing who you are, that's a little bit different than having a solid trading plan and understanding what kind of activity you need to make a trade, what kind of setups you're looking to make. So anything that basically talks about trading plans and you as an individual, I kind of count as trading psychology. That's just my opinion. Where can I find more? Let's see. I have just one system. I'm a day trader. Where can I find more? Again, there's lots of different things out there. There's lots of different software products out there. You could probably Google them. As long as you're using one that's working, make sure that that's your baby, obviously, and make sure that you're using it well and adjusting as the markets do. But obviously, there are other things out there. I don't have specific systems or software in mind. I'm just talking about in general. Before you go and purchase things, make sure you invest the time in yourself. Let's see. All right. Let me just flip down here. When it comes to FX, I'm just trying to read through these questions here. Yeah, I mean, someone's just talking about maybe a little bit of, they're talking about spots, so I'm not sure if they're talking about spread or whatever it may be. Yeah, I mean, there's been this kind of, there's books out there, whatever it may be, or commentary on websites and things like that about the broker is out to get me. There's enough people trading right now, and the financial markets are so popular. There's so many people trading out there that the broker doesn't need you and your commission, to survive. The broker wants you to be a successful trader who has a good relationship with them, who trusts them, and builds your account in size because you're trading well, and builds your account because you're putting more money in because you're doing well. So your trader has your broker has your best interest in mind, and that's hence why Interbank FX is doing this education tonight, these webinars and the different education that I'll show you in just a moment, and resources out there. They want you to be successful. Trust me, that's how they survive. So we're all what we call retail traders. All right, we're the last ones to know, and that's the first thing I have on my trading plan here on my desk. Is I am the last one to know, whether it's a central bank announcement, whether it's a rumor, whether it's a package left in Grand Central Station that can affect the markets, that shouldn't have been there, and it turned out to be a backpack, but it got the markets in the uproar. That was very common after 9/11 and things like that. We are the last ones to know, and hence we've got to trade accordingly to what the markets are telling us. Always trade with stops, always trade with the right amount of risk in place for our account size, because nothing is guaranteed out there, hence that disclaimer. Things can happen at any time, and if we overtrade and we don't have a trading plan and one thing happens around the world, that could be it. That could really hurt our account. That could blow up an account and things like that. But if you have good trading plans, you can have success, but it starts with you inside. Okay? I really do believe that. Like I said, ski bum. I was a ski bum and I learned to trade, but it does take a long time. It's not a get-rich-quick scheme by any means, and your broker wants you to be successful. Jumping a little bit into fundamental analysis as we kind of get close to wrapping up, just a discussion of current events and what they mean for traders and investors. The Federal Reserve, European central banks, they're supporting the markets. They're providing very, very low interest rates so that commerce can get done and business can get done, and it's working because the stock market is going straight up. And when the stock market goes straight up, something else goes down. It's called volatility. So these are different tools out here that I use to stay on top of the markets. A great website that links from Interbank FX, forexfactory.com, CNBC on television, Bloomberg TV, and you can stream it at bloomberg.com. Your broker tonight providing education, other market sites, software, and things like that out there. There is good information out there. So when the stock market goes up, what goes down? VIX, V-I-X, and VIX is very, very, very important to people who are hedging their equity investments that have large accounts. It's very, very important to people who are trading options. All right, so the VIX is a very well-known indicator of basically volatility. It's also called the fear gauge. The point is it's down, 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 down as the stock market goes up, 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 up. And when the VIX goes down, 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 that means volatility and opportunity. Volatility equals opportunity. The more volatile things are, the more opportunity there is, okay? So when volatility goes down, there's less opportunity. There still is opportunity out there. There's still opportunity to make great returns from trading in the markets, much better than parking your money in a 5-year or 10-year note or a 30-year bond or a treasury indexed entity, or in real estate right now. That could change, and real estate could be the hot thing, but right now, let's face it, that's not returning great things. It's not great returns right now. The markets are still providing very, very good returns. They're just not as volatile as they were based on the VIX. So the VIX over here last summer was much higher. Now it's much lower. If I flip this chart and I type in SPY, just a chart of the S&P 500, the broad index, okay, it's going to kind of look a little bit opposite. It was on its lows down here last summer, and now it's on its highs right now where we're at in entering February 1st. So the equity markets are going up and the volatility is going down. Basically, what volatility index is telling us that everything is fine out there. There's no worry, there's no fear, there's no uncertainty, and that's what the Federal Reserves around the world are trying to do, is they're trying to take the uncertainty out there and trying to basically support the markets. That may last for two months. That may last for 2 years. That may last for 10. Nobody knows. But that's what I mean by the markets dictate how often we're trading, how big of a size we're trading, and stuff like that. It really tells us the markets drive our decisions. Then we use our fundamental analysis, our technical analysis, and our trading personality and trading plans to try and find good opportunities. All right, we always have that trading plan, because what if things go against us? What if there's an announcement that goes contrarian to our position, into our opinion? We always have to have that trading plan, that risk management in place. Okay. So I just wanted to bring up Forex Factory. If you guys aren't using this, again, you can link to this from the website. So this is just a really good economic calendar of what's going on around the world. And I can scroll down here, and that's what I mean by, can you as a trader go to sleep knowing that all of this stuff is going to come out? So right now it's Tuesday night. And before you wake up, if you're going to sleep in the U.S., I'm not sure where you are, but before I wake up, there's going to be a slew of numbers coming out here before I'm back at the markets at 8 o'clock in the morning East Coast time. So again, this stuff could be volatile to the markets and it can affect your position. So that's why you have to have a good management in place if you're going to leave something on and be willing to kind of sleep through that. So no matter where you are in the world, you are probably going to sleep, and there are things going on in the trading markets while you're sleeping. So keep that in mind. Let me just check back as we slide in here. All right. I think I'm caught up on the questions. All right. So moving into the next slide, technical analysis. What are traders doing with the fundamental news? Well, obviously they're buying the crap, or as traders say, buying the snot out of equity markets. They're going up. And then we can look at some foreign currency relationships and things like that to show you what they're doing with foreign currency pairs. So here's some live intermarket relationships. So going back to the equity markets, here's your equity chart. And I'm going to bring it down to just just a 1 month chart. Okay. Stock market was a month ago at 126 for the S&P, and now it's at 133. So in 1 month, it went up about 7% or so. Pretty good month, right, to start the year for the first month of 2012 for trading. Let's see over the last month what the pound did versus the. Let's see what it did over the United States dollar in the last month. So let's see. We started here at 1.55. I'll blow this up. Let's see, January. Let's find January 1st. We were about 1.55. We dipped a little bit, but we're higher. We're about 1.57, 1.58. So that's in the pound. In the euro, all the stuff that's going on in the euro. Oh God, it's so bad in the euro. It's so bad in the euro. What have we done in the past month or so? Basically, the entire year of trading year of 2012 so far. We dipped a little bit in the beginning of the year, but we're definitely higher. And you can see the last few weeks for sure, just the last 2 weeks or 3 weeks or so, we went from 1.26 to 1.32. So a pretty big uptrend, and in the pound and the euro, pretty big downtrend against the United States dollar. So that's what I mean by that relationship. When equity markets do well, in the past, no guarantee of future performance. In the past, the United States dollar has been weak. Look at the Australian dollar. Look at what it's done over the past few weeks, all right? It's gone from, in January, 1.01, so almost parity, up to 1.06. And that's on top of it being much lower down or under parity, around 98 or 99. So it's moved up 8 or 9 pennies in a month and a half. Pretty impressive moves. Stock markets near its highs from last summer, and these foreign currency pairs may or may not be on their highs, but they're obviously doing very, very, very well against the United States dollar. The United States said we're not going to raise interest rates till at least 2014, and so that got a nice pop in all of the other currencies against the United States dollar. So there's that intermarket relationship, as I call it. There's nice relationships between oil prices and the United States dollar, Canadian dollar, Canada having a lot of commodities and oil and things like that. So there's nice relationships there. That's what you're looking for. This in the past has done this. This is basically reacting to it this way, and I'm looking for it to do it again, but I put stops in place and targets in place and try and manage it to the best of my ability. All right? No guarantees out there. I think we all understand that pretty well. Let's see. Okay, so again, I wanted to provide some extra benefit to you guys tonight. Your chance, okay? Not many people do this, but the only way that I can work with someone, all right, is to find out who they are. That's what I've stressed tonight, is finding out who you are. If you want an unbiased review, no fee, no obligation, it's set up via email, and we talk via Skype if you're around the world, or we talk by mobile phone, whatever it may be, if you're in the United States. And it's just 30 minutes with me asking you questions. That's very, very confidential information. And I basically put together a summary of what you can handle as a trader, as an investor, if you're interested in basically trying to manage your own accounts or profit from the markets. It hones in on exactly what I'm talking about, who you are as a trader. Then you can start to say, oh, they're talking about this. I don't need that. Oh, they're talking on TV about this. Hey, that works for me. Brian mentioned that might be something that I could use in my trading personality, in my trading strategy, in my trading toolbox. So what I do is I talk to you over the phone or Skype. I type up what we talk about, and I just send it back to you via email, so you have a nice, clear, concise, basically kind of an analysis on my part, and then kind of just some recommendations of where you could go. Again, there's no fee, there's no obligation. It happens very, very quickly, and you get this nice summary that you can use with you in the future as a trader, as an investor, someone trying to work at the markets. It really is an important step. You learn to focus on your trading personalities, whether your name is Sam out there or John or Bob. Sam and John and Bob now get an individual kind of review for them, all right? So that's set up through email, and that's bcon1@gmail.com. Our last slide here, okay, is going to be the quick review, and then we'll go into the resources list. So I do have two more webinars coming up in February for Interbank FX, so look out for those. Those will be about 2 weeks and 4 weeks from now, so be on the lookout for those. And we'll go into fundamental analysis, we'll go into technical analysis, and we'll definitely cover some more topics such as indicators and things like that. So to review tonight, we talked a little bit about the fundamental factors driving the markets. Right now, everything's great out there. Low volatility, equity markets are going up. Everything's fine out there in the world. We talked a little bit about some trends and technical analysis and things like that. Talked about some intermarket relationships, and obviously we honed in very, very, very closely in on you as an individual. So looking ahead, like I said, we have a webinar coming up in a few weeks. The topic, I think, will be moving averages. So if you're into moving averages and crossovers and things like that, hey, between now and then, you may, as an individual, know how moving averages work for you with your trading personality if you and I have a chance to talk. Education and recordings. Interbank FX, like I said, your broker is investing time and money in your education. They want you to be successful, so you use their site. There's an Interbank FX video link out there on YouTube. I've got about 13 or 14 different webinars out there. Raggy Horner, who a lot of you know, she posts her webinars there. So there's lots and lots of great information out there. I usually write a daily commentary right here at dailyforextradingedge.com. So keep an eye out on that one. That's usually a daily commentary of what I'm seeing, the fundamental and technical drivers. And then I also do comment on the Interbank FX Connect site, and I actually have a link to that right here. So I have a link here to the blog that I write. And this was updated today, so there is a post from today that just probably hasn't hit the wires just yet, but there was one written today, but this one was talking about trading the Fed. And then right here, this is the Social Connect site that IBFX provides, and these are my posts throughout the day. So something that you can get some intraday commentary, okay? This isn't a place to follow people because you don't know who they are. This is a place to get good commentary, so be careful who you're following, all right? I can't stress that enough. Be careful. You don't know why someone's making a trade, so it may not make sense just to follow them. They might have a totally different intention and time frame than you can handle as a trader. So it goes back to knowing who you are. Make sure that you talk to other people before you just go ahead and blindly do something just because someone else did. Okay? All right. Let me just check in and see if there's any final questions, and then we'll wrap up. I think we're good on questions. So thank you for your attendance. There were a lot of people on tonight. This will be posted on the YouTube website down the road. Hopefully some of you will be in touch. I think it's a very, very important step to being profitable in these markets, or at least having a good chance of success in these markets and understanding these markets a little bit better. So I'm providing information out there for you guys every day that's free through that commentary, through the Interbank FX social site, on the Connect site. Please use that information. Like I said, your broker is investing a lot of time and a lot of energy and a lot of money and hoping that you use it. So take advantage of it. But like I said, filter that information. If you don't know how to filter it, then that's where you and I might need to have that conversation. Thank you very much. I look forward to seeing you out there daily through various resources, and then obviously in a couple weeks on the webinar. So have a great evening, happy trading, and enjoy the next few days this week leading up to our unemployment report on Friday. Thank you very much.